Today I'm going to do a video on bank reconciliation, starting with the purpose of bank reconciliation. The main purpose is to calculate your correct bank balance. It's important that we can keep good internal control over the amount of money we have, and one of the ways of doing that is to do bank reconciliation. The next thing we can determine is if there are any errors or possibly fraud that has taken place. Once again, we're going to be using an external source document, in this case the bank statement, to verify our internal records. When we did creditors reconciliation, I told you about the importance of using external source documents to verify internal records. Right, so we're going to start off with our internal records, which is our CRJ and CPJ, and our external source document is our bank statement. And we are going to compare those two. And the reason for that is to identify your differences. Once you've identified your differences, you're going to do the reconciliation process, and at the end of the day, your business and bank's records should be in agreement. Right, so the method you're going to follow, first thing you do is you compare the CRJ and CPJ with the bank statement in order to determine where the differences lie. Then you ask yourself, who has not made the entry? Now, just like with creditors recon, there's only two options here. If it's a business, it means our cash journals are missing entries, so they need to be updated. If your answer is the bank, we're going to draw up something called a bank reconciliation statement. So your cash journals are going to contain those entries that appear in the bank statement only, and the bank reconciliation statement will contain those entries which appear in your cash journals only. Once you get to the end, you're going to total your journals and post to the bank account in your general ledger, and obviously balance that. The last thing you're going to do is you're going to balance the bank reconciliation statement, and once you've done that, you need to check that that balance is the same as the balance that you worked out in your general ledger. Okay, what I'm going to do today is actually go through all the possible differences that you can have, starting with bank charges. The bank charges are recorded directly by the bank, and it's only when we get the bank statement that we'll be able to identify what those bank charges are. So we have not made the entry, so we're going to need to record that, and bank charges are recorded in the CPJ because your bank balance is going to decrease. Interest on overdraft. The bank calculates interest daily and debits the total in your bank statement. You need to remember that the bank and the business view things from the opposite point of view. So if the bank is debiting the statement, they are saying that we owe them the interest. In other words, it's interest on overdraft. We haven't recorded that transaction yet, so that needs to go into our cash payments journal. Interest on current account, that will be credited in the bank statement because the bank is telling us they owe us that interest. So that interest has been received. We haven't recorded it yet, so we're going to record it into your CRJ. Right, direct deposits. It can happen that people deposit money directly into the bank account of the business. They can use EFTs or cash or whatever the case may be. We will only become aware of that deposit once we get the bank statement. Now, because people are depositing money into our bank account, that means we are receiving money, so that will get recorded in your cash receipts journal. Right, debit orders. A debit order is where you give another business permission to take money from your bank account on a certain day every month. So those debit orders get recorded firstly on the bank statement. It is only when we get the bank statement that we become aware of the debit order that's been processed. We are paying money there, so they will get recorded in the cash payments journal. Right, outstanding deposits. If you think about it, it's very possible that on the last day of the month we receive money, but our business closes, let's say at 5 o'clock. At that time the bank is closed already, which means we're only going to deposit money we received on the last day of the month in the new month. If that is the case, we are going to have recorded into our CRJ, but the bank won't have recorded it yet. So those are going to have to go into your bank reconciliation statement, and we're going to have two columns, a debit column and a credit column, and that's going to get recorded in the credit column because the bank owes us the money for that deposit. Then outstanding EFTs, we must record the EFT when we actually make the payment. That's to keep our EFTs in order in our cash payments journal, so when auditing takes place, for example, it's easy to check and verify those EFT payments. They might not appear though in the bank statement if they take place after the statement date. So if the bank closes the statement, let's say on the 25th of the month, and you are processing EFTs thereafter for the rest of the month, those will not be recorded in the bank statement that you receive. They could also be future dated, in other words, dated with a future date, let's say in the following month, even later than that. So those EFTs appear in our CPJ. The bank hasn't recorded them yet, so they're going to go in the bank reconciliation statement. And that will go in the debit column because they will decrease the amount that is owed to the business by the bank. Right, then errors in the bank statement. There are various things here. If a payment made is overstated or duplicated, in other words, it's put into the bank statement twice, that is a bank error, so it needs to go in the bank recon statement. And because they took too much money away from us, you're going to put that in the credit column. They owed that money back to the business. If, however, a payment is understated, then the bank reconciliation statement will need to be debited because they did not take enough money out of our account. If we're dealing with deposits, if a deposit is overstated or duplicated, now they've given us or said they owe us more money than they actually do, so to fix it, it's going to go in the debit column to decrease what they owe to the business. And lastly, if a deposit is understated, that means that they've said that they owe us, let's say 100, maybe they owe us 500, so we need to record that they owe us an extra 400. So those are going to go in the credit column. If we make an error in our books, in one of our journals, in the CRJ, if you record the amount as too little, then you're going to need to record an additional entry in the CRJ to actually update your cash receipts journal. If the amount recorded in the CRJ is too high, then to decrease your bank account, you will need to make an entry in the cash payments journal. And in the cash payments journal, if the amount recorded in the cash payments journal is too low, then an additional entry will need to be made in the cash payments journal to record the difference between the amount recorded and the amount of the, that should say, EFT. If, on the other hand, the amount recorded in the CPJ is too high, that means we've decreased bank by too much. So to fix the error, we're going to need to put the difference into the cash receipts journal. Right, and then often you start off in the information, they give you a bank reconciliation statement from a previous month. Now that's very useful because all the differences in previous months between our books and the bank's books are in one place, which means you don't have to go back and recompare previous month's journals with the bank statement. So, the bank statement, though, of that current month must be compared with the bank reconciliation statement, because basically what you're trying to determine is whether the outstanding amounts have been recorded by the bank or not. So, if EFTs still do not appear in the bank statement, then they're going to need to be recorded as outstanding again under the debit column. If, however, your EFTs that were outstanding last month or deposits that were outstanding last month have been recorded, that means the bank has now updated its balance. So therefore, there's no longer a difference between our books or the bank's books, which means we don't need to record that again. One last thing that you obtain from the bank recon statement from last month is your bank account opening balance in the ledger. Okay, that is taken directly from last month's bank reconciliation statement was the closing bank balance. That then gets brought forward in the new month, so that is why we start our ledger off with that balance. Alright, in future videos I'm going to go through first of all a worked example and then secondly some additional activities. But this video that I've now done covers all the differences that you need to know. Thank you.